SoFi stock has been on an absolute run over the past few days. It feels as though the momentum is shifting to the positive, and all of this is happening in the weeks leading up to the second quarter earnings. I just wanted to hop on this video, share some thoughts around this momentum shift because I think it's going to be very important from a stock perspective. Let's jump right in. So, realistically speaking, there's a couple of things that happened. I mean, I made a tweet about this saying that SoFi stock has been going on a run ever since Anthony Noto went on CNBC and cleared out some of the inconsistencies in analyst bearish notes and the remarks out there and the low sentiment from retail, and overall put the market's mind at ease with regards to the tailwinds that SoFi has coming up from a business catalyst perspective. Rates coming down, student loans are looking really good. Home loans is definitely going to be heating up towards the end of the year, and also reinforcing the fact that their conservative decisions that they made for the business, particularly with the lending segment, seeing a decline, as well as their guidance, is an active decision that the management team is making. It's not an external factor that's lowering the growth rate of the company and permanently hindering their ability to continue to scale. It's actually decision making because they want to be more conservative in the macro. Well, SoFi stock has run since that time. They hit a 52-week low on Tuesday. They hit $6.15. That was Tuesday, July 9th, I think it was. And ever since then, they've been consistently climbing higher. Well, the other thing that happened that week was the following day, we got the inflation numbers, and the numbers actually came in very positive. So I think here there's a couple of things playing in conjunction. Macro is looking really much better than expected. CPI is looking good. And it's looking more and more with every new data point that we're getting that we're not going to have such a hard landing, that the market is going to be recovering. And really, that's exactly what we want to see, right? I think that the entire sector is getting a lift. I think that plays definitely a bigger role here, that this is all macro related. Yeah, Anthony Noto coming on really helps SoFi stock specifically. But if you look at some of the other stocks that SoFi is commonly compared to, a lot of them are going higher. You look at Lending Club, for example, you look at Upstart. And I even saw a post by Chris Patel on X that all banking stocks in general had run up quite a bit over the past couple of weeks, which further reinforces this idea that the macro is really the rising tide that raises all ships. And it's not really a SoFi specific catalyst that's making the business climb higher. And then the thing that surprised me is that, yesterday the QQQ fell a crazy 2.6%. Today, the market was predominantly red. And yeah, SoFi fell 4% today. Yesterday, they were able to maintain their gains. And so it seems as though, regardless of the hitch that we're having right now from a macro perspective, if you look at over the past 2 weeks, there's been some momentum that's building on SoFi. And so there's really two things that I think we know for certain here. Number one is, of course, we're heading into earnings. Earnings is going to be on Tuesday, July 30th, pre-market. And we know that SoFi typically goes on a run heading into earnings because, let's not forget, SoFi has a very rich history of crushing earnings estimates. If you look at the past couple of years, they've double beat and raised guidance consistently. And I think recently a lot of people have pieced together that pattern, and they almost assume that every single quarter is going to be a double beat and raise for the company. And so typically, if you look at the chart for SoFi and you look at when the earnings dates were, SoFi tends to run leading up to the earnings results. So that's number one. Number two is, of course, the fact that we have an 18% short interest on this company, right? The setup is really, really interesting because the momentum shift is really what we need. We need that spark for the company to show some signs of life, for them to start bouncing back because of this 18% short interest, because of this catalyst with regards to the earnings. SoFi has been known to go on some pretty explosive runs over the past couple of years. We ran from $4 to $12 in a matter of weeks. We've gone from $7 to $10 consistently in short bursts. And so, nothing in this video that I'm really talking about is fundamental related. They're not related to the actual underlying company, but I think it's really interesting context. I think I want to see more Anthony Noto appearances on CNBC. And really, as the macro keeps getting better and as we get closer and closer to rate cuts towards the end of the year, then I think the picture for SoFi is going to look much better, with the stock stabilizing higher than where we are right now. Of course, a lot of that is going to be riding on the second quarter earnings results. I think that's going to be the toughest quarter for SoFi. I think they're going to be able to crush the back half of the year. But the past couple of videos, I've been fairly neutral on the second quarter earnings results. I hope that they come out and they absolutely crush their numbers. But if there was a quarter that I was more concerned about, it would be this particular quarter specifically, because I mean, it's been quiet from a news front. They haven't really had a lot of announcements, a lot of releases, and even the guidance that they provided was somewhat soft, even though they raised their full year guidance. So I'm really confident that they're going to come in very strong on the back half of the year, but in Q2 is, a different story. And the last thing I want to say is all of this in my mind, at least as I'm seeing this stock rally, is I'm looking at it through the context of Tesla, because I've been posting on X that Tesla is very momentum driven. It's very story oriented, and it has a lot of tailwinds in the form of catalysts for the end of the year. And I think that SoFi, in large part, has parallels to draw with regards to the catalyst towards the end of the years with rates, with regards to it being very momentum driven in terms of how explosive the stock price is, given some catalysts that happen in the macro. And really with Tesla, I bought that stock again in the $230 range, even though I was almost exclusively buying in the 160s, 170s earlier this year when I was DCAing. And the entire reason why I did that, why I bought on the way up, is because it's very momentum driven. Both SoFi and Tesla are at that point now where they're breaking 3-year downtrends. They're breaking through this sort of dormancy period where they've been, low volume, low attention from a stock price perspective, of course, for quite a while. And that's exactly the trigger that I want to see from a momentum shift perspective. Because I mean, I've said this on podcasts in the past, and this is just sort of a video of me sharing my raw thoughts in the moment, is that SoFi, I really think, needs a spark to show some signs of life again in the stock price. And right now, it hasn't had that. The quarter has been fairly quiet, fairly soft. And overall, it seems as though we're in this very limbo state, waiting for the rates to come down towards the end of the year, waiting for some of the catalysts to come in the fall and in the winter, and really pushing our expectations back, because essentially the macro environment didn't offer as many rate cuts in 2024 than we were initially expecting at the beginning of the year. And so we're pushing back all of our expectations on SoFi. And so I really think that when you put all these things together, we need more quarters of profitability. Why? Because a lot of analysts will look at the stock on a year over year basis, and they want to see that trailing 12 months to be all profitable quarters for them to deem that it's a profitable company. Even though somebody like myself and other SoFi bulls will see the latest quarters of profitability and the trend line and start to extrapolate from there to say, okay, next quarters are also going to be profitable because they're on the way up. Some analysts, they want to see that consistency with the last 4 quarters. And then the other thing that we need is we need some news of new product offerings, some innovation that makes us confident that SoFi can capture more market share, and also that makes them more comprehensive from a valuation perspective than just looking at them as a bank. A lot of people will say SoFi is a bank, but in fact, SoFi is not growing like a bank. SoFi has business lines that other banks don't have. And really, the market is discounting that. And I think that once those new business lines start to activate, particularly with Galileo, then that's really going to be beneficial for the company. We'll see, of course. I mean, Q2 is going to be the really determining factor of whether this rally can sustain itself. The macro is going to play a really key role. But right now, it seems as though the momentum is shifting for SoFi. And that's an exciting thing to see. I'm sort of seeing it as a bystander on the sidelines, because regardless of what happens, I'm still holding the stock for the long term. But the trend is seeming fairly positive. I think if we break through that 3-year downtrend line, then from a technical perspective, it's going to look much better. And if we're reinforced with really good earnings in Q2 and a really terrific expectation of guidance in the back half of the year, then I think we're really going to be picking up steam in SoFi and seeing some real highs in the stock. Let's see if it happens. For right now, thank you for watching, and I will see you in the next one.